Hey, Intro to Accounting. Today we're going to check out lesson 3-4, and it's a pretty quick one. We're going to look at how we actually create a second journal page, and then if we make a mistake when we're writing things on pen and paper in our journal, how would we actually correct that? So it's a pretty short unit. Let's jump right in. The first thing that we're looking at is what happens when we complete a journal page. And you can see here it says a journal page is complete when there's insufficient space to record any more entries. Once again, these graphics don't do the best job of kind of describing this, but you can see this break in this line and it's all labeled here like 1, 2, 3, 4, 5, 6, and then it jumps to 33 and 34. So what this is showing is the entire page would be filled up. And there's two different ways that this can happen. The entire page is filled up and you go, oh, okay, now we're going to move on to page 2. Or the other way is, let's say there's just one line, okay, just one line left over. Should we split up that transaction and put one part of our entry on that last line and then move on to page 2 and put the other part on the very top of that? Should we split up that transaction that we have? No, we should not. Okay, if there's one line left, then you're going to just automatically move on to page 2 of the general journal. Do not split up your transaction, because the whole point of this is we want to make it as clear and concise as possible. When we split up a transaction in that way on page 1 and 2, what happens is we make it a little bit more confusing, and we just want to avoid that. So the journal entry should not be split into 2 pages. What we do is we're going to just move on to page 2. And here we go. This is starting a new general journal page. How do we tell it's a new page? Well, up on the right-hand side, it says page 2. We were previously on page 1. Okay, it really is that simple. Some of the things to maybe keep in mind when you go over to page 2, let's say all of your transactions were in January and you wrote January on that first transaction that you had. And then after that, you just wrote like 2, 3, 4 because we had the month up there. When we move onto the second page, it's really important that we put the month. And if you're writing it in by hand, you'd also put the year there. But make sure that on that first transaction that you put in, that you're writing out the month at number 1 here. Because if somebody's just reviewing, let's say page 2, you want to make sure that they know what month they're looking at. So that's all there is to starting a new journal page, okay? It's really pretty straightforward. The next thing that we're going to want to look at is correcting entries or correcting errors in our journal entries. And this can happen, right? Remember that this is an official document and we're writing it out in pen if we're doing it by hand. And all of these transactions are in chronological order. So we are not going to change the order of these transactions, even if we screw them up, okay? We do not want to do that. We want to make sure that we keep them in chronological order. That's going to be one of our highest priorities, along with making sure that it's easily readable, okay? Everything here should be as easily readable as possible. So we have section 1 and 2 and 3. 2 and 3 are very, very similar, but it says, number 1, sometimes an entire entry is incorrect and is discovered before the next entry is journalized. So what that would mean is, let's say you record that you bought supplies with cash, and what you did is you put in that it was a supplies expense instead of creating supplies as an asset, right? Or writing down supplies on the asset account. Instead, you record it as an expense. But you didn't record any transactions after that. Well, if that's the case, all you have to do is draw a straight line across the incorrect transaction. And you can see that for number 27. They recorded an advertising expense when in reality it was a miscellaneous expense. But we would just assume that nothing was written on lines 11, 12, 13, 14, 15, 16, 17, and so on and so forth. So we just draw a line directly across it, and then we write the correct equation, or excuse me, the correct transaction right underneath that. So this method is used as long as there's no transactions recorded underneath it. Now this picture shows transactions recorded underneath it. That's why it might be a little bit confusing. That's why I'm taking some time to fully explain that to you. So for number 2, it says if an error is recorded, cancel the error by neatly drawing a line through the incorrect item. Write the correct item immediately above the canceled item as shown on lines 13 and 14. So if we look at 13 and 14 here, this would be assuming that, let's say we recorded 10 transactions, and then we go through everything and we go, hey, I think this one was wrong. So there's already transactions written below the incorrect one. So what do we do in that standpoint? Because we're not going to draw lines all the way through that transaction and then write it on the bottom. We still need our transactions to be listed in chronological order. So what we're going to do here is we draw a nice, clear, straight line through that $300 you can see here, and you would write the correct amount above it. And that's $30 here. That's what we're looking for. And that is how we're going to correct a transaction that's incorrect, but we've already recorded transactions underneath it. And 3 is very, very similar, right? Sometimes several correct entries are recorded after a correct entry is made, which we've already kind of looked at. The next blank lines are several entries later. Draw neat lines through the incorrect parts of the entry and record the correct items on the same lines as the incorrect items, directly above the canceled part as shown on line 16. So the exact same thing here, right? We're in the same situation, and we draw a straight line across it, and then we're going to write our correct amount above it. So 2 and 3 are kind of really similar, is what it comes down to. So that's how we're going to correct those errors in those journal entries. Just get past evaluating web advertising, and that's all 3-4, okay? That's the whole thing. So let's move on over to the work together problem now. So here we are on 3-4, work together. And you can see that there's a good amount of transactions that are listed here. And it starts on April 22nd. One of the things I want to point out right away is there's a page 1 and then there's a page 2. Okay, so there's this little tab up here. You might get down to the bottom and go, what the heck, Mr. Roberts, there's nothing here. I don't have enough space. Did I do this right? You probably did it right. You're just missing that there's a page 2. So make sure that you see that. So let's jump in. It says Norma Dirks owns Dirk Copy Center. Using the information provided, journalize the transactions for April 22nd through the 27th. Okay. Source documents are abbreviated as follows. Check is C, receipt is R, sales invoice is S, calculator tape is T. Use page 2 of the journal to journalize the remaining transactions for April. And this is going to just combine all of our entries that we've had. So let's jump down. It looks like we have 21 that's completed. Hopefully this doesn't get stuck. Yeah, it didn't. Okay. It always stinks when it gets stuck because then you got to reload the page. Okay. So we can see that on page 1, we've already had April listed up here. So we don't need to list April. All we're going to do is we're going to put in the date, which is the 22nd. Remember that the first account that we list is always going to be the debited account. So we paid cash for a water bill, and this is going to be considered a utilities expense. So remember, utilities expense has a normal debit balance. So we know that utilities expense is going to need to go up because we now have more of that expense. So I'm going to write in utilities expense. And this is going to be in the debit column. And it's going to be $180. And then what happens to cash? Well, we're paying cash for that, and cash is going to have to go down. So how do we decrease cash? We credit cash to decrease it. And then please remember that we also need to put in our source document. There we go. 22 is done. Now, let me just address something real quick. I see people that'll go like this. They're gonna look at everything and they're gonna try to do it out of order. Okay, they're gonna go like S2 because it looks like source document 2 is there. Then they'll go, okay, there'll be 2 more. Then I'll go T26. And then I'll go down and I'm going to put in C8. And they're going to like list all the source documents first. or they might go down and list all of the debit accounts first, or they go and they list all of the dates first, or whatever it is. I'm going to urge you, do not do that. That is not what you do in normal accounting. Okay, you record them as they happen. Look at these are on specific dates, and you're going to make entries every single day. So I wouldn't go through this and go and start journalizing and just like already know what's going to happen in the future. I'm telling you, you're setting yourself up for failure if you do that. Okay, especially later in this class, it is meant to be done one at a time. And it's also going to help you go through that thought process, right? Of like what accounts are affected. Do they need to go up or down? You know, which accounts debited, which accounts credited? And these are all questions that you want to be thinking through. You don't do that when you go ahead and try to game the system here. I assure you, I've seen a lot of people do it. You're not gaming anything. You're not actually going faster. Just take your time and do the transactions one after the other, okay? I promise you, it's more effective in the long run. So for number 23, it says sold services on account to K Spa. All right, I sold services on account. What's that going to actually affect? Well, whenever I sell services on account, that's going to be an accounts receivable. So I have accounts receivable here for K-Spa. And the other thing, when we sell something, even if it's for cash or when it's selling something on account, it's going to be a sale. So accounts receivable is an asset. How do we increase assets? Well, we do that with the debit side. Okay, that's how we increase assets on the debit side. It's the normal balance. So accounts receivable is going to be listed first. Sometimes it takes a second to figure out how they want you to write some of these out. So that's fine if you spell it wrong or whatever else for now, because you can figure out like, hey, it corrects you, right? And maybe you don't know it's just dash k dot spa. So, you know, take your time with it. It's all good. So accounts receivable gets debited. What's the other thing that's going to be affected? Should be revenue. I think our chart of accounts, though, is sales. Yep, so it's listed as sales. So just like that, sales. And what do we do to sales? Well, sales goes up, we increase it, right? So it's going to be $345 is going to get credited. And the last thing is we have our source document, and that's going to be S2. Let's move on to transaction that took place on the 26th. We received cash from sales. So now we just made a sale for cash. This is really similar to 23. The only difference is we're not selling it on account. We sold it for cash. So if we received cash, cash is going to increase. Cash increases on the debit side. So cash will be listed first. It's going to be $980. And as we look at this, it should be sales. Sales will go up 980. Don't forget your source document, T26. Okay, let's keep moving. On the 27th, we paid cash to an owner as a withdrawal equity. Let's look at our accounts. When we look at this, it sounds like that would be a drawing, right? Because Norma Dirks is taking money out of the business account for herself. Maybe she's going on vacation. Who knows? But Norma Dirks' drawing has a normal debit balance. Okay, it has a normal debit balance. So we need to increase her drawing account. So this would be Norma Dirks. Let's see, you got to go back to the chart of accounts and look. Okay, so it's going to be Norma Dirks, comma, drawing. You know, sometimes they make you list it different ways. So you do need to go back there and look. So she took out $420. Well, what did we pay her with? We paid her with cash, and cash needs to decrease. So we credit cash to decrease it. She's getting paid with a check. It looks like it's C8. Well, let's move on to the next transaction, which is on the 27th. And it says paid cash for supplies. So what we're doing here is we're exchanging one asset for another. What asset goes up? Supplies. How do we increase an asset? We debit it. So supplies increase, and it'll increase by $66. What goes down? Well, our cash is going to go down, and it'll go down by $66. Let's put in our, we paid cash for it. If we write out a check, it'll always say we paid cash. Usually if you're a business though, you're going to write out a check so you can have that source document. So let's just look over the transactions we did real quick. I have a debit and a credit for each one of them. They all match. I have a source document for each. I'm feeling pretty good about this. I know that I ended on the 27th. So now what I can do is I can move over to page number 2. All right, here we go. Page number 2. And I'm starting on the 28th. So for this, what I'm going to put in though is April, right? And then I'm going to put in 28. Now, why am I doing that? Because we're on a new page. If somebody would just be looking at this page, they need to know that it's April. So we put in April 28th. Let's see if I just put in 28. What'll happen? It'll let me do it, right? So make sure April 28th. We're moving on to a new page. We absolutely have to do that. Here we paid cash for postage. It's telling us that it's a miscellaneous expense. Expenses have a normal debit balance, so we need to increase this miscellaneous expense because we're spending more money in that account, right? We're spending more money on this expense. So let's write miscellaneous expense. And it's $35. What's going down here? Cash is going down by $35. To decrease cash, we debit it. So our document number here is going to be C10. Next, we have the 29th. Now, I don't have to put April there because I already have it on this page. We received cash on account from K's Spa. So right away, when I receive cash, I know, hey, cash is going up. And it's got to be debited. So it must be the first thing that's listed here. So $200 for K Spa, or excuse me, $200 in cash is going to be increased. Now I know the other account that we're dealing with is accounts receivable. It's K Spa. Now, you might look at this and go, oh, it must be a credit because there's already a debit. But just think about it for a second. We received cash on account from K-Spa. This account here tracks how much K-Spa owes us. So if K-Spa paid us money, do they owe us more or do they owe us less? Well, now they owe us less money. So accounts receivable is an asset. How do we decrease an asset? We credit an asset to decrease it. So accounts receivable at K-Spa is going to decrease by $200. Make sure we fill out our document number, which is R3. And for number 30, it says received cash from sales. What's going to happen here? Well, cash is going to increase. It's the first thing that's going to happen. So 745. And this is from sales. So sales has a normal credit balance. We need to increase our sales, so we will credit it. 745. Here we go. And our transaction, or it's going to be tape 30, right? Calculator tape 30 here. And there we go. Looking at our transactions, I have source documents for each one. I have a debit and credit. I feel pretty good about this. So let's go ahead. I was going to say, where is it? There it is. Okay, I was covering it up. So let's save and continue. From here, we're just going to submit because this is the on your own. And you guys can do the on your own on your own. So I'm done. Let's grade this assignment. Let's see if we got anything wrong. Looks like we're good to go, okay? 3 out of 3 here. So make sure that you do the on your own, and let's just pull up the application so we can see what it looks like. What it looks like together. And you will recognize that it is pretty much the exact same, okay? right? We have a list of transactions, and they're not all going to fit on the first page. This one actually only has small bits, and then they go over to page 2. So same thing, same concept. If you have any questions on 3, 4, please let me know.